feelings about what they are and opinions. They don't manipulate markets. They make it possible for you to buy puts and calls. Someone has to own shares of SPY and shares of Q and shares of NVIDIA in huge quantities for anyone to be buying 180,000 contracts, right? So market makers are the ones that do that. And in order for them to keep their shares, to keep supplying for that demand the next day or the next week, they have to hedge their positions. And one key part of this is they don't want to lose their shares. So they'll do quite a bit of finessing in the market on and off the books to keep price levels stable. Now, if they're exposed to a big price movement, then they have to act accordingly. They have to sell shares or they have to buy shares if they're not exposed enough to price movement, because if we go up, people might want calls or people might want puts because we've gone up too much. It doesn't matter. But they have to have enough shares to supply the contracts that people come asking for. Because what happens if you go to Costco and there's a big line for toilet paper and Costco tells you there is no toilet paper? You're going to get mad that you bought this annual subscription and they don't have what you need. And then Costco gets a bad reputation because they're out of inventory. So a little bit of a loose metaphor, because Costco does like making money and market makers aren't really here to make money. It's nice when it happens, we in the quant space like to say, but their goal is to supply for a demand. If you want calls, they have to provide you with the collateral so that you can buy that call, which means they need to buy 100 shares of something. And we're talking about huge amounts of interest, 180,000 on that NVIDIA chart, right? So they have to have the NVIDIA shares to back that up. And if they're exposed to too much price movement, that means they don't have enough shares to write options. And they will do things to drive the price lower so that anyone who has calls is a little bit screwed for sure. And they can supply for puts on the downside because they can lift the prices up as much as they want. They've got trillions of dollars. On average, market making funds like Chicago Mercantile Exchange and New York Stock Exchange groups, they have about $5 to $10 trillion in cash to move markets if need be, to stabilize things. And similarly, if they can't stabilize things, it gets really bad. Because what did I say earlier? If you can't buy puts to hedge your positions, you have only one option, which is to sell if things get bad. So GEX indicates the exposure that market makers have. Lower the exposure, more probable chance of a move relative to current prices. So right here, we dipped and there's low gamma. That means it's entirely possible that market makers have no problem if we go up the next day. So you're looking, this is 225. They had no problem today going up. That's why it's a part of why. It gives you a bit of a full picture about why where there was dip buying today. Is because there was low gamma exposure, which means market makers have no problem if people want to buy calls. They have no problem if people want to buy puts. We are safe. We are stable. There is liquidity. All right. So let's see. Hijacked my stream. Thank you. Very cool. When I say cluster of puts supporting us, do you mean sell side puts that will be exercising the shares at that price level, or do you mean there's an interest in people wanting to buy puts at that price point? It means that there is a demand for those puts, and that creates basically an interest in the company at that price level. Because you should ask yourself, why didn't they buy puts lower, right? Because they think the fair value of that company is the strike where there's a cluster. If the market's wrong, that can happen. Sometimes the market's wrong. Sometimes everyone in the market is wrong, but most days that's not the case. So when they buy puts at one price level and not another, and then in fact there is a cluster forming that is highlighted by the algorithm in Prism for you, that means that this is basically as low as people think it could go. And in fact, a lot of them will buy the shares. At those volumes, those kinds of puts, like that's not all Wall Street bets. That's not after hours. That's like funds that want shares at that price. So they're buying the put now. And then as it goes down, they have safe premium that guarantees that they're going to be right. And then they can exercise and they can get the shares if they want, which is most of the time what they want for quantitative reasons. Otherwise, everyone has to pay taxes, right? So if they're trying to please a customer or a client that's using their wealth management services, it's really better if that person has a precise idea of what the price of something really is and then gets their client those shares at that price and then it recovers. So that's the role that puts play for a large portion of institutional investors and quantitative funds. Day Zero will be streaming the NVIDIA earnings call here, which I'm super excited for. I hope it's getting recorded. Big burden on NVIDIA's for sure. Awesome to hear, Twilight. If you need resources that don't cost money and don't require any major commitment, get a hold of me or a lot of people in the chat, and I'm sure that everyone's got some information. Everyone needs GPUs, that's right. Reposting from above, can I explain the basics, how to read the clusters and impact on open interest? Hopefully I did that. I saw that that was like 7 minutes ago you said that. So if you need more help, please get a hold of me in the Prismatic Discord. I'm available nearly 24/7, and I can explain more of how this works. But you've also got the AI in there. So if for some reason I'm asleep, then talk to her, and she'll tell you. You can literally talk to her in the Prismatic Discord. You can get in the voice channel. You can talk to the AI. Yeah, agreed. DeepSeek, not everyone looks at that. Too many people operate on fear. Look, talking about AI, I think is really interesting, and I'll answer Morningstar's question because it's a good one, how to interpret the average strike. But the market doesn't know much about AI. Maybe we young people do because we toy with it or we used it to get assignments completed or maybe even work. But the rest of the market doesn't know much about AI, or NVIDIA would have been priced in 8 years ago. That is the same reason why one day this trend for certain companies will eventually come to an end because of fear. Should DeepSeek have caused a sell-off? And if you don't know what's going on with that, look up some DeepSeek headlines and how it's a Chinese-made artificial intelligence model, and it spooked American investors into thinking maybe we won't be on top in the AI arms race. I'm not going to share my opinion on that. It's not super important, but the little information that wealthy, older investors have about AI causes very quick exuberance and really quick fear on the other side. That same reason why we went up and why there was so much alpha on a company like NVIDIA or even AMD back in the day, which I bought at $3.62 way back in the day. It took a really long time for the rest of the market to see the power in AI. That length of time that they took to finally get it and understand it is the same reason why eventually they will sell it, because they're scared of what they don't know. So I just want that to sit in everyone's head, and I hope I have more exciting conversations about that topic, because I think the rest of us debatably know a little bit more about what's going on in the world than some of these, pardon my language, but some of these boomers, right? I think we have an understanding of what's next. So don't be scared because NVIDIA sells off. Just know that it means other people are scared, and that's why they're selling NVIDIA. They don't know as much as they thought they knew. And so they're getting rid of it now while they can take profit, because they're like, I don't know what DeepSeek is. I don't know what China's doing. I don't know what AI is all about. I got in too deep. And so they're selling. That's what's going on there. Average strike. Okay, so if it's just an average, right? So it's a weighted average across all the open interest levels and the strike prices that those contracts represent. You have this average distribution right here, which points you right to it. So you'll notice on the tooltip, I might have to zoom in, but my tooltip says 604 right here. So that's the top of the bell curve. That is the 99th percentile. Most stuff is capitulating around there. Of course, there's kind of a range, right? It's a little bit scattered, but most of it's capitulated in 603, 604-ish area. And this just tells you precisely what it is to the decimal. 603.43. The way to interpret that is it's sort of a magnet for prices, because like I said, market makers want anything but to lose their shares, because if they lose their shares, then they can't supply the market with contracts the next day because there's no collateral for those contracts, or at least the market makers don't know what whoever got those shares is going to do with them. So they play an important role in the market. They supply us with puts and calls by owning the shares. So that area where the average strike is where the most contracts expire. And if you think that it's unlikely we go toward that every day, it's not going to be true every day because of headlines, market sentiment, earnings reports on big companies like NVIDIA, which are propping up the market. It's not going to work every day. But most of the time, that is where prices tend to go toward, is the average strike, because 90% of options expire worthless. And you need a story. You need to be able to explain why 90% of them expire worthless. And the reason is because market makers need to keep their shares. They don't want assignments. So they do things like that. They sell or they buy with their $5 to $10 trillion they've got put off to the side. They basically burn money moving the market so they can keep their shares and supply us with more liquidity and more risk aversion the next day, next week, month, quarter, till the cows come home. So it's a magnet for price areas, and that is why. And that's why 90% of options expire worthless. There can only be one price we end at the end of the day. And how do we figure out what that is? And it's based on hedging activity, Of course, buying and selling, but mostly hedging activity. That's the great thing about options, is they protect you on a longer time frame than a single action like pressing the buy or sell button and waiting to see what happens. They allow you to, I mean, shoot, I forget which ones, but some countries don't even let you buy puts because they don't have enough liquidity. They don't have market makers capable of supplying you with those puts, so they don't allow you to buy puts, and then you're a sitting duck in their economy. You're just holding shares of IKEA in Sweden. I don't think Sweden's the one, but there's a couple countries, I forget them off the top of my head, that just don't let you buy puts because they don't have market makers with the liquidity to buy and rotate shares like we do in the United States. So use this information. It is lucky, and we're in a big, powerful, money-rich country with high velocity. So that's basically what average strike means. And you'll notice, if we do this for NVIDIA, right, we see a lot of scattering, but even now, the average strike is kind of around the fair value of NVIDIA if you ask around. Let's go ahead and look at open interest for March, which is when options expiration happens on the quarter. So we're going to squish these up a little bit, regretfully. And yes, you can modify chart sizes, move them around as much as you want in Prism, which is handy if you're in your car on your phone, using a VR headset, whatever. You can make it look however you want. So we see that there are really significant areas of support going into March, actually. Okay, I'm going to save this for another video. This has my interest, and I'm going to get distracted. But suffice to say, the reason I pulled it up is because you're going to see that there's bigger ranges for movement the further out we go, because people become more uncertain when you're talking about larger timelines. Because a lot can happen in between now and then. But also there's some sticky stuff here for the 21st I'm not going to talk about just now. We're going to save that for another video or another session. But yeah, the further out you go, you'll see the average strike kind of melt into a weirder area because there's just more hedging activity going on at different price ranges. But oh man, this is interesting, and I can't wait to look at this later. Yeah, like I said, it's going to distract me, so I'm gonna remove that now. We'll save that for another day. We have to talk about that another day. It's really important. Have you looked in the statistics around how often average strike falls within the smallest range of error? Yes. You can look at this historically. It's very pragmatic. I don't have the number off the top of my head, and I don't want to give you it's very easy to get a precise number and hand that off to you. So I'll find out historically speaking what it's been. This does have historical options data, but solving that problem with sort of a back test is an interesting exercise. But I'll be honest with you, it's not a primary motivation because what I'm saying is very by the book. And I do mean that I'm looking at a book to my right where it will literally say the exact same things I'm saying. So I don't want to spend too much time proving that. But if you go on some Twitter accounts, X market makers, you ask ChatGPT about the average strike price of the weighted average, that is, and you can find out that this is pretty common information on the day-to-day with SPY. Okay, so I should declare that when you're hedging on a daily basis and you're pricing in less uncertainty, there's no real reason to suspect that it wouldn't be very accurate most of the time. But I get why you're asking, Getty, and it's because if we could find out what the average margin of error is, we could find out more precisely how to enter better trades. So I'll look into that and I'll add it to Prism. That would be that's a good exercise for everybody if you're not afraid of statistics, that is. All right, any more questions before I go into the super important sales pitch for why you should be paying attention to Prism right now instead of later? Don't feel bad. There's no stupid questions. Do I want to talk more about Gex and Dex? Gex and Dix. What else is there to say? Okay, so here's an edge case about gamma exposure. Yeah, what Fel said is true. A tremendous amount of options expire weekly, monthly, and quarterly options, as well as the FOMC meeting. It is a banger. It's a big one, Friday the 21st, that March. So an edge case about gamma exposure, right? Gamma exposure is high. That means market makers are super susceptible to price moves and they could lose their shares. Okay, I summarized that part earlier. There are situations in which demand for calls means that they have to buy more shares, right? Because they're exposed to the gamma. In that situation, if you see that gamma exposure is high, and if you're looking at the options price history and you see that the volume is accumulating on that option, and it's close to the current strike, That can force market makers to buy more shares than they currently have so they can supply for more calls if the need arises. Now, to parse that sentence out, if we're already going high and the gamma exposure is already kind of high, and there's a high demand for calls, which means market makers have to buy more shares than they're currently holding, if you think that makes prices squeeze upward, you'd be correct. That's what's known as a gamma squeeze. So looking for that is available in Prism 2. We do have options Greeks as a chart. It's not going to be very interesting right now because the market's closed, but it is a feature, right? You can add it to the row. I can do SPY, pick tomorrow, and we'll see delta at first, but I can select from this drop down pretty much any Greek, probably ones you haven't heard of, like third order Greeks. So this information can help you determine when a gamma squeeze could happen, but you want to use the power you've got. You want to know that GEX is high. You want to know that the exposure on the indices is high. You want to pull this up for a contract and a strike. So I'm looking at the tomorrow's expiration, and you want to assess the gamma risk for a specific price area as we head toward it. And then you want to pull this up for that same strike and see if the volume's increasing. And then you can tell your buddies, oh, I think a gamma squeeze is possible, right? So unfortunately, there really isn't one right now. Unfortunately, meaning there's just not going to be some crazy upside rally. But that is an interesting relationship between gamma exposure. Instead of looking at it in a historical manner, like how likely is it we're going to go up tomorrow? It's like we're already up. Gamma exposure is high. So wait, I thought Alloy said market makers don't like that. Well, they don't. But everyone has a place in the market. And if you start buying, well, if millions of people start buying calls as we're going up because of some sentiment driven or speculative reason, like back in the GameStop days, or when everyone had cash at home because of Trump checks, I'm talking like 2020, 2021 era. If you were there, you know. That kind of stuff can cause market-wide gamma squeezes. But most of the time, what you'll want to do is look at the major exposure on the indices and then maybe check out an individual equity on this chart and see if there's a lot of volume, there's a lot of gamma implied for the strike that you're looking at, and the gamma exposure is high, then you can absolutely see a squeeze, and you can make, on a single play, upwards of 500% is my norm when I capture something like that. So that's another way to give an example of how gamma plays a role in markets and market makers that, again, they have to hedge. And sometimes they can't control whether it goes up or down, or they don't have cash to burn by selling. Because, I mean, selling's not going to help if what you're worried about is more people wanting calls. That's not going to help a market maker. You just have to buy more shares. And that pushes prices up even more. And that makes all the people who want those calls a lot of money. So that's a gamma squeeze. But you don't want to say that happens for no reason. There are three things you have to see happen. Gamma exposure is high. Options buying activity is high, calls specifically, and you want to identify which strike has implied gamma associated with it. Implied meaning if we go up, will the value of that contract also go up? So again, don't look at gamma and say, oh, it's high in this area, that means we're going up. No, it means that if we go up, that strike will obtain a lot of premium associated with it. Okay. Thank you, Bust. I appreciate you. How do I use this chart to play a buy sell put on an individual stock? We've been talking about that for a while. I gave some recommendations on NVIDIA in the form of straddles. I've given price levels. Link up with me because if you need a little bit more help determining how to use this information, I don't blame you. It's a difficult market, and it's a lot of information this time that I'm showing you guys. I threw a whole new chart at you guys today because we released it last evening. So don't blame you. Don't feel bad about asking more questions in a DM. But I'm going to go through some other questions now because I did lay out pretty much a whole plan for tomorrow. On an individual stock, though, let's just put it in a nutshell, right? So I'm looking at SPY a lot of the time. You can type in NVIDIA here, and where you see a lot of interest at a certain price range, like obviously buy low, sell high all the time. So if you're bullish, you want to get a good entry. You want to get a cheap call when we're about to go up. And the way to determine that is to maybe look at historical options interest right here, right? A way to do that is look at what the rest of the market is doing using open interest relative to prices where we are. We saw big support at lower levels yesterday and Friday, right? And we went down to those levels, meaning that support was necessary, but you could have been bullish on the premium. That's possible. So you could have done that. But in general, just some advice is I try to pick at the money strikes because I'd like to have high conviction in my trades. Out the money, I don't see the point in it if you think you know what's going to happen. If you think you know which direction it's going to go in, then you want to go long or short the current price. Because if you're long, then you think it's going up from here. If it's short, you think it's going down from here. And if you're not doing that, you're buying out the money options. What I would suggest that means is that you don't have very high conviction in the trade, and you're probably not practicing good risk management and good entries and exits in that scenario. So that's a little. In any case, when to buy them. I went into that a little bit during the session, and just now I elaborated what to buy and what strike. Try to aim as close to at the money as humanly possible. And if that sounds expensive or difficult for you, it means you're lacking conviction. So don't sweat it. Get better at finding your conviction and go from there. It's a journey and you're on it. So make your money. How is order flow utility interpreted? Good question. I'm debating if I should just say the same thing I've said about order flow before or if I should change it up. Candlesticks are pretty dumb. That's how I'll start. Candlesticks are difficult to consume and learn from because it's only red if it's lower than the previous candle. It's only green if it's higher than the previous candle. If that sounds dumb, it's because it is. If it sounds obvious, it's because it is. It doesn't tell you what happened in the flow during that trade. You can look at volume and get some sort of an idea, but you don't know how much buying and selling actually occurred at that moment at that price level. So I'm going to share the screenshot again in the chat, and you can look at the tooltip I've got displayed. A couple of things I'm going to say here. What you want to look at is consistent buying or consistent selling, right, at certain price levels. That's really going to make you a more convicted trader at those price levels. You're going to know more confidently when to get in and especially when to get out of a trade. Like exiting is one of the most difficult things because you don't want to miss out on profits. You don't want to leave anything on the table, but you also want to de-risk and take it's all notional profits. None of it's real until you sell for green, right? So that's one of the most important things. And order flow, I think the best thing it does for institutional traders, fund managers, and myself and people in the Discord, it's one of the most commonly used tools. And generally, a good order flow tool will cost between $5,000 and $25,000 a month because it is so good. So the other thing is the tooltip shows you actually the exact amount of bidding and asking on a tick level. So every millisecond orders are coming in. So don't wait for that candle. Why wait? That's just cheating yourself out of it. It's not your fault. If you didn't know about order flow or order footprint charts, you're like the rest of the retail trading world. It's not your fault. It's kind of a country club is what I like to say. They keep this stuff from people. The data is very expensive. You have to buy in or you have to know somebody who owns a data brokerage in order to get access to it. It's very difficult to acquire and it's very expensive. So it's not your fault if you didn't know about it, but this is tick level data. Every single order that comes into the market from millions of traders all around the globe, you see it right here in order flow as it's happening. Every millisecond. So seeing the bid and ask for every second that passes and then seeing some consistency in that, you're watching a candle get born, basically. Instead of waiting for it and then missing out on a small move or not getting the perfect entry, this maximizes your risk-taking potential because you're able to see precisely when something begins to happen, not wait for it to already happen and wonder, is it too late to buy or to sell? That's really how to use it and why it's so important and why it functions that way. And yeah, there are no orders coming in through the market right now. So trying to get it to look this way at the moment is not going to play out. But every day in pre-market up until about 6 p.m. Eastern Standard Time, you'll see orders start coming in. And of course, during the day, you'll see a lot more orders come. Like during the regular trading hours, it'll start coming in. All right. So because there might be more questions and I'm all for that, I'm here. But because people might need to leave, change any diapers or put people to bed, including themselves, or maybe do a college assignment, I'm going to say this one part here. Prism is in beta, and by beta, I mean there are some small quality of life issues. So someone brought up the fact that they tried to save a dashboard, and when they reloaded it, it didn't remember the tickers that they had. So little things like that. That's what really encompasses the beta in the Prism beta right now. It is in private beta. It is invite only. We do not plan on... it will always be invite only. So if you have a friend in this Discord or in real life that's got access to Prism, then in the future, you can get connected through them. In the future and now, it will always be invite only, and it's going to be harder to get, and I'll explain why. Even given the invite, the price is going up soon. That's the nature of beta versus more rigorous production software, right? So we have a couple of things we're ironing out here. Like I said, really minor quality of life things. But every day, people are using this, especially the order flow in the middle of the day. I'm using it to create the levels that I post on After Hour that a lot of people are using. You can scroll through my profile and you can see how some people are using it in their own way. Roshan converts them to SPY. So if you see my levels and they look a little bit different than what you're used to seeing, it's because I'm looking at SPX and ES, which are SPY futures. So don't worry about that if that was Greek. Just go to Roshan's profile and you'll see the levels that he's converted. We make money hand over fist using this tool every day. So here's the information I'm going to give you, and I'll give you a timeline for when you can expect this to leave beta and the price to go up by about 10 or 20 times. And we don't need more subscribers. Like I said, we're exclusive, we're invite only. We're not looking for that. What I don't want to happen is I don't want people to find out about it later and complain when they hear that the price is different. So I'm telling you now, this is your chance. $50 a month right now. After that, we're looking at $500 to $1,000 a month, depending on how much some artificial intelligence stuff is going to cost in the cloud. That is your warning. If you come back to me later and you're surprised that the price is up, at least you got some information from me today about your options. Now, how long until that happens? I thought it would be in 2 weeks, a week ago. So far, it's on track. We might have a small delay getting out of beta by about a week and a half. But that's a big maybe. That's a big if. So, like today, I pushed 2 new features. We had a huge update and improvement to order flow, and it was actually really fun. Thanks to everybody who was in here who was helping me. That was a blast. We looked at several different versions and iterations of it, and we decided on a way it should look and the best way it works on mobile. And we ended up with a version that you see in the screenshot there. So if you didn't know what it looked like before, don't worry about it. But it's greatly improved now, and it runs even better on mobile. So that was really fun, and that's a great aspect of this community that I love. You guys are making this better every day, and it's about time that we start getting out of the beta stages. So I'm taking in all the suggestions, working with developers, working with accountants, and we're getting it ready to go. So that's it. That's the spiel. It's not much of a sales pitch. I'm not a good salesperson. That's really not what I'm here to do. I just don't want you guys to be upset later if you find out that the price has gone up. And if you don't want it, here's the great thing. Someone will be in here streaming it. In fact, if you're nervous about it, what I say to you is don't get it. Don't buy it. You'll know if you need something like this. Most of the people that use it are trying to grow portfolios because they have family they want to love and take care of. They have college they want to pay for early. Or maybe they just are working from home and they have all this time free and they think, why am I not making more money with my day? So those are typically the people who benefit from it the most. But if you want to do something like that and you're not willing to shell out $50 a month, which is very low, I already told you it's going up, but don't worry about it. Come in here, watch someone else stream it for you. It'll either be me, Hijack, who's currently streaming the stream that we're in right now. It'll be Roshan. Somebody in here will be streaming it, so you don't have to pay for it. And I don't know many people can say that. There's probably someone knocking on your door to try to sell you something. And I just want you to know there is no pressure. You don't have to buy it. Someone will be in here streaming it and you can learn. But if you like what you see and you make money doing it, follow them on After Hour. They're taking the time out of their day to stream it. And follow them on After Hour. Be nice. And just know that the price is going to go up. So if you have regrets later, just don't come yelling at me about it. That's all I'm doing here. I'm just trying to set good expectations. It is similar in that is monthly, Pratik. Quant data, really, I'm going to be honest, no one really uses options Greeks and some of the stuff that they show, not in quantitative finance. So full disclosure, I've been in quantitative finance for 10 years. I've been doing data science for Fortune 100s and working in artificial intelligence and deep learning for about 8 years of my career. I worked at Bank of America's Treasury Department I had a 1-year stint, but you can't trade when you work at the Treasury Department, and that was a bummer. So I spent a year there, and then I wanted out. And so I'm just going to let you know that's my background. That's where I'm coming from. Pratik, nobody in the trading world, institutionally or quantitatively, uses something that looks like quant data. They do not use that information. And what I would say is whether you get Prism or you don't, totally fine, but don't pay for anything that promises to help you trade better during the day that does not offer order flow. If it does not offer order flow, it is lying to you and it's taking your money. That's just from, take my word or don't. But I gave you my experience and my background, so I'm not just talking out of my ass here. Be careful who you give your money to in general, and I'm giving you some benchmark. Don't worry about Prism. Go shop around and find something that gives you order flow. That is going to be the institutional standard, and you will be participating in that standard if they have it. Thinkorswim has something called Bookmap, which is almost identical. It's $40 a month just for that feature, and you have to be a Schwab. You have to be a Schwab customer, so you have to have an account with their bank to use it. And then the last thing is, it sucks. Thinkorswim takes a long time to load. I love Thinkorswim, so no shade, but it takes a long time to load. Yeah, I'm going to keep my opinion to the side because I'm getting tagged in the chat. If you want Prism and you don't have it, contact me or Roshan. We can send you the link, and we can get you hooked up. Increasingly, I think day zero, if you don't mind, because you know a lot about it too, and you know what's coming down the pipelines. What I would say is reach out to day zero, Roshan, or myself, and I'll probably be the quickest one to respond, just because of the three of those guys, I'm the developer and I've got the least amount to worry about during my day. I day trade quite a bit. I do it live in here, so like I said, I might be one of the people streaming, but in general, reach out to myself or Roshan. And now, okay, I see people asking about it, and I already made the case that it's going to be more expensive soon. So before I post this link, just something to remember, do not get it if you don't match that profile. If you're not trying to make more money in the day, or you're not trying to learn more about the market for the cheapest, probably debatably the cheapest price you can possibly get it at, then don't worry about it. Just come in here, get a feel for it, and maybe just keep it in the back of your head. You've got a week left at this price, but maybe you never get it and you just watch other people stream it. That's totally fine too. Okay, so boom, there's the link. Do with that what you will, but there's no obligation at all. It's improving very quickly. It's an exciting time and we have a fun community. Those are some little extras that I feel like mentioning. Yes, great question, Commies. $50 will be locked in. You'll be grandfathered in. Yes.
Al, you realize you've given it the Reddit hug of death right now, right?
Well, I'll regret it in a second if that's the case.
Because we all must wait for the future, and it's just load, and now it's white screened. Good job. Oh, wait. Maybe it's just my internet. I just came in here because I saw there were so many users on here. I know Day Zero and you all have been working on talking and making more community events. So it's pretty awesome that this is what you're doing. Yeah, I have just a blank white screen.
Okay, try a different browser maybe. It's pretty hardcore. It's not like a video game. So if you've got like power saving features or any of that, you want to turn those right off. Try Chrome, try Safari, try whatever. Yeah.
I had to load it up a couple times on Firefox to get it to work. No worries. No, just came in here to peek in. I love what you guys do. I understand that this is your product. I think you and I have talked about that before, but you keep bringing value to After Hour with a lot of the things that you do. You stream it free on here so that way people are able to use and you don't pressure anybody for that. I cannot endorse anything, but I just appreciate that you still respect After Hour with everything that you do. Even though I'm not technically an employee or anything, I'm just a mod too. So
yeah, and that's important to note. Like full disclosure, I'm a mod of After Hour, and so like I keep saying, Seymour is absolutely right. There is in theory like you should just watch out about anyone pitching anything to you at all times. Absolutely, don't ever just go by my word, and that's why I say if you should follow, in general, in my opinion, you should follow people in the market who are making money. And if you have, the more evidence you have that they're doing that, I think the more your conviction should grow in following that individual. So like I follow 250 people on Twitter just for this, and like a lot of them I have to kind of ignore. But there's a couple people that are diamonds in the gold mine, so to speak, or I wouldn't follow any of them, right? So come in here, don't buy it. That's what I'm saying. Don't get it. Watch it for free. Keep as much money in your portfolio as humanly possible. But if you've got family to take care of, or you've got a lot of time on your hands and you work remotely, then I do think that it's something that you could have up open in a screen. And I originally made it to make myself more money because I'm having a kid soon. So full disclosure, my wife and I are having a baby in late March, and I'm not going to have time to open up Thinkorswim, or I might be in the car at a stoplight and need to open up something on my phone. I made this for that purpose, and then other people saw it on my screen, and then I had to do all this other stuff like make a login system, make a password reset form. None of that stuff I wanted to do, but I was making money, and people were asking how I was doing it. And I'm surprised every day at how many people haven't heard of order flow because I've been doing this for so long. And it is a godsend. Like I would be nothing without order flow. So look up the price that you'd be paying for order flow elsewhere, and then assess whether or not you're interested in that technology in this product. And then don't buy it. Come in here and watch someone else stream it and make money because it's that good. Discord is delayed by like half a second. So you're not don't worry about that. You can come in here and get the same benefit from it. And it's good. It's real-time data. So that's it. I'm going to maintain it till my baby is 18 years old and I don't have to do this stuff anymore, maybe. But you're good for the long term. And Steve Moore's right. Don't take my word for anything. Check it out. Talk to people who use it. And don't come to yell at me if you want it and the price has gone up. Period. That's it.
I'm taking off. I just want to come in and say good job on that. I love the fact that you have so many people here, and that I've been to some of your all's daily, not classes, but just sessions. It's nice. Have a good night and keep being good. All right.
You too. Appreciate you, man. Thank you.
See y'all.
Do I have a PDF for it? Awesome question. No. To answer your question, no. There is not a PDF for it. The AI is pretty good. People in there will correct her if she's wrong. It's not perfect, to be honest. But yeah, we'll make a guide on it. I know a lot of users are really interested in a said guide, and they're interested in contributing to it. So you're going to get insight from everybody who's used it, not just my perspective, which I think is good. Everyone's got a different way of looking at it, but that's a great question. And if you join, we have a suggestions channel. So if you join and you see something you don't like, please yell at me about it. Don't ever feel bad if you see something in there that's ugly, dumb, doesn't work the way you want it to. People have asked for things that I've released them the next day. So I'm at your beck and call for the most part. Here's a bit of advice about the 400 when you're registering. Copy and paste the CAPTCHA and remove the spaces. The font is tricky and it's meant to confuse robots, obviously, but we've learned that it confuses quite a few humans. So don't feel bad, but when you're registering, try copying and pasting the CAPTCHA and removing the spaces. And most people find that it works after that. Okay, so understandably, I've got a lot of DMs. I'm getting to each one of them, I promise. I'm gonna let who else? Do I have any help here? Is Roshan in here? I know Day Zero is, so that's awesome. Yeah, Roshan, Day Zero. If you want to give your opinion or answer any questions that I can answer, go for it. I'm gonna respond to a couple people before it adds up and they feel ignored. Yeah.
Why you steal my wife, bro?
So the 403 that typically happens when someone uses a different email for Stripe than they used for logging or registering the account, but it's really easy to fix. So just get a hold of me and we'll remedy that. Yeah. It will be presented to you when you log in successfully, at least. Yeah, Roshan and I are use it every single day. There's quite a few people who will give you opinions on order flow, but why don't we'll draft up something community based with a lot of people's insights and we'll blast that out. And of course that it'll apply to anything like Prism. So it's not going to be it's any market tool like this should be pretty similar. It's really just their prices that differ and the amount of access they're giving you to it. Um, so it's going to be a good guide for trading in the market. Period. It doesn't mean you have to use Prism to benefit from it. So we'll give some insights there for sure.
Yeah, I just stopped streaming. I figured he wasn't really doing anything anymore.
Well, I'll add something for you. Uh, I manage